Singapore's second quarter non-oil domestic exports fell by 14.6% compared to last year. The third straight quarter of decline has prompted Enterprise Singapore to revise down its NODX forecast.
Singapore's second quarter exports declined because of trade tensions and a global tech cycle downturn. Electronic exports plunged nearly 27% on year. Integrated circuits, disc media products and PCs made up most of the contraction. Non-electronic NODX slipped by more than 10% on weaker demand of petrochemicals and civil engineering parts.
Well, the weakening in NODX that we've seen in the last few months has certainly been far worse than even my expectations. We're getting the next number later this week. I'm expecting another double-digit contraction in year-on-year terms.
Singapore is feeling the impact of a slower global economy. The country's second quarter growth was a weak 0.1% on year. Amid a challenging global environment, Enterprise Singapore revised its NODX forecast to between -9% and -8% for the year, down from its earlier estimate of between -3% and -2%. The weaker global economy prompted the US Central Bank to cut interest rates in early August.
The fact that they have started to cut rates, started cutting rates faster than what market has priced in, even though they may have less policy space on the rate front to cut, suggests that there is a fair bit of urgency on their side.
Exports to all of Singapore's top markets decreased except to the US.
That's, I think, Singapore benefiting from having a free trade agreement with the United States, but it hasn't been enough to offset the decline in exports to other parts of the world.
Economists are expecting Singapore's central bank to ease its monetary policy in October. It could weaken the Singapore dollar, making the country's exports more competitive. But economists say it may not boost export growth for the rest of the year.
We have seen dollar Sing obviously trade above the 138 handle. This is in line with the softening in the Chinese yuan and a lot of the other EM currencies as well. Because it's a global slowdown story and there is a bit of that trade war at play, a weaker Sing in itself will not help to mitigate the slowdown in growth.
For the rest of the year, Enterprise Singapore says trade growth is expected to moderate further. This as the International Monetary Fund downgraded the growth outlook for Singapore's key trade partners like China, Japan and other ASEAN countries.